right. Hey, you. Thanks so much for tuning in to the Weekend Wrap. My name is Corey. You are listening to the Trade Journals. It is April 4th, Sunday night. Let's see what's going on in the news. All right, so we had some pretty exciting stuff happen over the weekend as well as last week. So the big news was that New York State became the 15th state to legalize recreational marijuana, as well as expunging previous marijuana-related drug charges. Legal sales won't begin until April of 2022, but is expected to create thousands of jobs and will undoubtedly boost the state economy. In other news, a leaker is offering data on 500 million Facebook users through a low-level hacking website. Facebook states that the data is quote-unquote very old, from 2019, and was already fixed, but reports show that the data is legitimate. We had record highs last week. The S&P crossed the massive $4,000 barrier on Friday. Price ground up virtually all day on low volume and ended up closing on a spike. Apart from that, the market focus this week will be on the congressional response to Biden's $2 trillion infrastructure package, but as well as the higher corporate taxes, which investors fear may inhibit profits. The initial plan calls for spending on roads and bridges, to internet and elderly care. It could add half a point to 1% to the estimated 5.2% GDP growth in 2022. As far as different edges that one might engage upon in lieu of this plan, it could potentially spark investment in the industrials and basic materials sectors. So a couple stocks or ETFs you might look at are XLI and PRN, as well as some green energy companies, CQCLN and RUN. RUN is a solar company. So as far as the corporate taxes goes, Biden plans to raise corporate taxes from 21 to 28%, which had previously been put in place by the Trump administration, and has generally been supportive of stocks, although the tax raise may not go through till next year. So, apart from that, Iran has rejected any step-by-step lifting of U.S. sanctions, requesting that all of them are lifted ahead of talks in reviving the 2015 nuclear deal, also extinguished by the Trump administration. Big news for cryptocurrency, and this one really caught me off guard. JP Morgan lifted its Bitcoin price targets to $130,000. Absolutely staggering. So that's really, really good news for crypto investors. Also, I forgot to put this in the news, guys, but on May 3rd, there will be a new micro-sized Bitcoin futures contract. So from my memory, I believe the tick size is $5, and one would make or lose, I believe it was 50 cents per $5 in price movement. The size on it is it's based on 1/10 the size of a Bitcoin, which is a $5,000 notional value. And again, like I said, it goes through on May 3rd. So the freighter stuck in the Suez Canal was also freed on Monday, and the sum of ships backlogged waiting to pass have done so. Oil prices, you may have noticed, did not jump up how I had expected them to, as the ship was freed on Monday. Apart from that, the cryptocurrency exchange Coinbase goes public on April 14th as well, with a float of 114 million shares. All right, here are the upcoming events on the calendar this week. So we've got the ISM non-manufacturing PMI tomorrow at 7 a.m. Pacific time. Tuesday, we've got the EA short-term energy outlook, as well as the JOLTS job openings. So if you don't know what the JOLTS job openings are, basically it's just a metric that watches the number of job openings on the last day of the month. So this is for, I think I have February here, but this would clearly be March. So apart from that, we've got crude oil inventories. So it's expected that we're going to have a slight surplus this week, and then last week we had a very slight draw, so not a ton of movement in oil at the moment. On On Wednesday, we also have the FOMC meeting minutes. So that was from the policy meeting held 2 weeks prior. Thursday, we've got initial jobless claims, as well as Fed Chair Powell speaking at 9 a.m. So definitely want to mark your calendars for that one. And then Friday, we have the PPI month over month for March. So, and as far as the PPI goes, it does not expect there to be a change with last month. Last month was at 0.5%. And it looks like it's forecasted to be the same. One thing I wanted to point out, like I said, I did add all these charts on here, so it can just make it a little bit easier for one to I mean, a lot of people, I would imagine, they're not going to have very much experience with economic indicators, so therefore trying to understand any of this stuff in context may not be of any use to them. So that's why I tried to add these charts in here, so you can see this is so let's look at the ISM non-manufacturing PMI. So this is a composite index measuring business activity, new orders, employment, and deliveries. Above 50 equals sector expansion. So previously we had 55.3 and we have 58.5 forecast. So basically we can look at the historical chart and we can see that the PMI was pretty strong here, or has been pretty strong. This is all these charts are showing the past year basically. So for the past 7 or 8 months, everything has been really strong. Last month things slumped just a little bit, but it looks like we're going to be pushing back up again. So basically what that tells us is that business activity, i.e. new orders, employment, and deliveries, is increasing. So that is a bullish argument, so to speak, for the PMI. As well as we've got this steady increase on job openings. So really, I mean, a lot of amateur traders, I hate to say it, are gonna take this data and they're not gonna know what to do with it. They might just look at initial jobless, and if it's above what's forecast, they might buy, or if it's below, they might sell. I mean, obviously that's not a very strong example, but you get the idea. It's just like a very cryptic and arbitrary way of using this information. But really, what I'd like to help you guys with is actually looking at the charts and making an more informed trading decision based on what's actually going on in the economy. So that's why I have these charts on here, and I really hope that instead of just marking your calendar and taking some arbitrary trade off of it, actually learning how to apply this stuff in context, because I definitely think it is helpful information, particularly for you value investors, and trying to be ahead of the curve in that respect. So anyways, that's my 2 cents. As far as earnings goes, this week we have Carnival Corp. Tomorrow, Tuesday, we have Paychex. Wednesday, Lamb Weston Holdings. Thursday, we have Constellation Brands and ConAgra. Constellation Brands, that's the Canopy parent company, Canopy Growth. And then we don't have any major IPOs this week. We do have a number of IPOs on Thursdays, but none that are over 500 million in market cap. All right, let's take a look at the sector analysis for last week. So these are the major ETFs for last week. The strong sectors we had were large cap, tech, financials, emerging markets, and consumer cyclicals. The weak sectors were volatility instruments, U.S. Treasuries, and precious metals. You can see that corporate fixed income was mixed. Here are the U.S. Treasuries as they stand. Gold is still in somewhat of a slump, although the gold miners did perform fairly well. You can see NUGT was up, what does that say, 8? I can't tell if that says 8% or not. So, of course, here's emerging markets. Leverage products, are always going to do either really well or really poorly. And here's tech. So, And then if we look at the whole market here, so we have semiconductors did particularly well. We've got Nvidia up 10%, TSM up almost 13%, Qualcomm, AMD, Mu, all performed really, really well. Also, Adobe and Square both did quite well. Adobe was up 7%, Square did 10%. And then Google and Facebook, both communications companies, were performing well. Facebook up 7% last week, which is pretty big for their market cap. Also, financials with Visa and PayPal performing fairly well too. So, as far as weak performers goes, there really weren't many of them. Healthcare, health insurers like United Healthcare, and tobacco companies didn't perform all that well. So yeah, but overall things were very strong. In on the global scale right now, China came back with strength last week. The sanctions that we talked about last weekend wrap definitely played into the pullback over there. Also, Australia performed quite well last week, and South Africa. I know little to nothing about South African equities, but if you're someone that likes to diversify, you might consider picking up one of these South African ETFs. And then the weakest performers last week were Brazil and Japan. So you can see Japan here mixed, and Brazil, I know they're having really bad problems with inflation right now. So. Okay, so here is what's going on in the overnight session so far in the S&P. So I apologize right now. I know that my data usually looks differently, having come from NinjaTrader. My data is off at the moment, and I'm just waiting. I've already taken care of it, but it won't be turned back on until tomorrow morning. So in any event, here's the current overnight session, and then here is Thursday's Globex session. So you can see this area with the high volume is Thursday's regular trading hours, and we closed on a spike. And then in the Globex session, we were able to hold above that spike, putting in a very large point of control right down here at the bottom of the range. And then as we progressed towards Friday morning, we closed on a spike just before the holiday kicked in. Now, during the overnight session, things are largely in balance. You can see the point of control is weighted till the top of the range. And really, I'm just waiting to see if this 40-15 level is going to hold. So this spike right here, there are two aspects that we could take into consideration. Ultimately, the strongest behavior would be if we held above the close of the spike. That would be the most bullish outcome. If we trade back within that spike and open up inside of it, that would still be bullish. I mean, it would confirm the spike, but it would be, clearly less bullish than had we, gapped up. A bearish opening, however, would be if we actually, tested the, hit the base of the spike basically and traded through it. So, 40-15 is really an important level for me. That's Thursday's high of the day. But really, realistically, as long as we can stay above 4,000, we should be pretty good. One thing that I talk about in the next slide, as you'll see, so we can see this very large area of volume right here, and this is right at 4,000, which is also Thursday's point of control, and we're continuing to go up despite the fact that we haven't come back and retested this POC yet. So if you listen to any Jim Dalton, you'll know that if the market is continuing to go up despite not having come back and retested a prominent POC, then it's typically weaker hands that are pushing it up. Okay, so it's important that the market comes back and retest a prominent POC before it goes higher, because it gives those longer term, stronger hands the opportunity to re-engage and get back into the market. But if you're just continuing to grind up without having retested an important level like here at 4,000. It can imply that it's weaker hands, and therefore, it kind of paves the way for long liquidation. If we look at what happened last week, so last week I was looking for us to come back up and retest Friday's high and then get continuation, ultimately retesting this pivot high up here, what was the previous all-time high, with a potential breakout. And that's exactly what we got. So you can see this is the candle. This was the overnight session when this previous screenshot was taken. You can see that we did come back up here and we retested the pivot, broke through just, like I had suspected, and continued all the way up through 4K. So basically, just to kind of summarize where we're at, although I remain bullish until I'm given a reason to think otherwise, it's my suspicion that our distance from the monthly VWAP, meaning last month's VWAP, having gone up on low volume, and the untested POC suggests that we are due for a correction. Likely the market may need to break before it can rally again, giving stronger hands an opportunity to re-enter the market. So just to kind of reiterate, you see we went up on really low volume last week. This was Thursday's volume, which was actually less than 1 million contracts, which is very, very low. This is the POC I was talking about here at 4K. And yeah, like I said, I think we're overdue for a correction. This is last month's VWAP right here, actually, and we're a ways above it. This is the 2 standard deviation band, so we're above 2 standard deviations of VWAP. So statistically speaking, like I said, we're due for a correction, so keep that in mind. All right, here are some trade ideas, but first let's talk about what happened after last week's. So I was looking for continuation after the V bottom on GameStop. Here's our V bottom, and it mostly just ground around. It really didn't go much of anywhere. We still could get a breakout of this trend line, in which case that would be bullish. But yeah, as it stands right now, it's just neutral bullish. We still could get our breakout, in which case it would, have made this trade worth it. But not a whole lot's happening as of yet. The Bitcoin trade I played out very nicely, though. If you were here the Friday prior to this, I called it around right in, I think it was about this area. And you can see that we came all the way up and tested 60K. So you would have had the opportunity to ride that almost $10,000 move, which would be pretty phenomenal. And then SOI, Solaris Oilfield Industries. So I was looking for a breakout above this weak high right here, and then we didn't end up getting it, but we did remain in balance. So we're putting in a little bit of an inverse head and shoulders in, and I still think this has the propensity for a good long trade. But CL oil futures did not cooperate. So although this setup was very bullish looking, the oil instrument, oil futures, was bearish pretty much all last week, so that's why we didn't get that good follow through. However, oil does appear to be on the incline again, so we'll talk a little bit more about that soon. All right, here are the setups for this week. So NEO has the opportunity for a decent short. This is a short to midterm swing. You can see on the profile from Thursday, it's a lowercase b shaped, so that we actually gapped up really strong right here, and then the sellers came in hard, and we could not get back up towards this trend line all day long, which would have had the longs a little bit nervous. So I am looking for us to sell off likely on the open tomorrow and potentially retest this pivot low followed by 32. So my initial target would be 34. And then would potentially just be waiting to see what happens at 32, if it's going to break lower or not. So this is a long trap play, looking for longs that would have gotten trapped, looking for the potential break above this trend line. So this is a 1 hour time frame. CVX, this is a bullish short to midterm swing. So I'm looking for a retest of the week high at 107.57 with a potential breakout. So here's the week high that I was referring to. So basically, it's just a pullback, and we've got a trend line here. I didn't mark it, but you can visualize that, I'm sure. Looking for this high to be broken, and it would pretty much turn into a bullish channel at that point. So for me, I think just taking it to this gap fill right here at 110 would be perfect, because that's pretty much right where your upper trend line would be for a bullish channel. So yeah, but you potentially could ride it out to see if we would take it all the way up past 112 to this pivot high up here. It just depends on your risk tolerance. So. And lastly, SOI. So here's what I was talking about with oil, and you can see that we had this massive volume on Thursday where the shorts came in hard and were not able to get enough traction. The longs came back up with a vengeance, trapping out all of these shorts, and we're now testing the low volume node at the top of this range. If we can break back above this low volume node, above $62, that is pretty much my line in the sand. If we can get above 62, then this thing should most definitely follow suit, albeit it may follow suit anyways, in which case I would most definitely be looking for a retest of $15, or at a minimum for the gap to be filled up here at, I think it's 1450. I think it's 1450 maybe. In any event, so yeah, this looks like an inverse head and shoulders to me, and yeah, if we can get a break above this week high right here, just above $13, it could definitely be a decent short to midterm play. So. Okay, cool. So to summarize, although I will remain bullish biased until I see indications to believe otherwise, I feel the market is overdue for a correction and may need to break before it can rally again. The focus this week will be on the $2 trillion infrastructure bill as it moves through the various phases of Congress, as well as the market's reaction to the legalization of recreational cannabis in New York. So you'll definitely want to be paying attention to canopy growth, Aurora cannabis, all the pot stocks tomorrow, guys. It's the Wall Street bets, that whole crowd is bound to be buying in pretty heavily tomorrow. So watch the pre-market volume, and whatever you see is spiking hard in the morning is bound to probably continue throughout the day. So we'll be here in the morning brief to take a look at it though. And again, don't forget to mark your calendar, because Powell is speaking on Thursday at 9 a.m. Pacific time in the morning. So that's all I got for you guys. Thanks again so much for tuning in. Good luck tomorrow. Watch your risk, and we'll see you for the morning brief. Take care.